What is going on, my friends, and welcome back to another video on the channel. I know this is really late. This is a really weird time for me to upload a video, but of course we have to address what is going on with the $38,700 Bitcoin that we are seeing right now. Now, just earlier on the channel, we were starting to talk about the possibility of recovery, right? We did see something of a W bottom forming, in which we did get faked out right here. We saw it towards the end of the day that we saw this push back to the downside and a complete invalidation of a bullish reversal once we saw the closing below 41,400. You guys know for the last about week and a half or so, I've been saying that 41,400 was an absolutely crucial level, and that if we did start to come back down to there, it was very likely that we would enter into our final level of support before going ahead and saying that the likelihood is we are looking at possibly the start of a bear market, right? You know, that is within the realm of possibilities. And the moment that we saw the push back below these macro lows, you know, back on January 10th, I said, guys, we might be in the realm to see a retesting back to the $35,000 range. And it does definitely seem as if that is within the realm of possibilities at this point now. Now, a lot of people have been saying things along the lines of this is the bear market, you know, once we lose $40,000 and that we're going to continue to 20K if we lose 40K. And I'm trying to get rid of this green line. There we go. And I honestly, I really don't agree with that, personally speaking. You guys know that there's the main key level in which I pay the closest amount of attention to that validates downward moves. And it's always the 618 to 786 level. Now, of course, what I've been paying attention to on the channel in the last maybe 4 or 5 Bitcoin videos was from swing low to swing high, this macro Fibonacci. And what we know is that as long as we are above or within our macro Fibonacci on a long-term perspective, the likelihood is that we can find some support and continue to the top side. But the moment that we do go down, to then start to lose that 786 level, the bottom side of this golden Fibonacci zone, that, you know, at that point, it becomes much more likely that we will see a retracement back to our range of lows. In this case, looks like $28,000, but even usually sometimes in that instance, it can extend even further, maybe in this case to the $22,000 range. Do I think that's likely? No, not really. But it's possible, okay? And so at the moment, although this fall is terrible, disgusting, no one loves to see it. I'm down a lot. I'm down about $100,000. It is what it is. You know, it's simply just the name of the game, and we have to play this thing as it needs to be played. This is exactly why we've been waiting for bullish confirmations to the upside and not just dollar cost averaging just because we were seeing red. So now at this point, what I would go ahead and be paying the most amount of attention to is, are we capable of holding and finding some support within the 618 to 786 zone above $34,806? Now that we did lose that key level of support that we've been talking about on the channel for about a week at 40,300 to 41,400, now that that's lost, this is the last level of support that we have, guys. I know a lot of people don't want to hear it, but if we were to lose this level, for example, on the weekly perspective, we would then have lost the 100-week EMA, and from there it usually gets pretty ugly. Okay, so right now I'm not going to go ahead and say that this is the bear market just yet. You guys know I will give my honest opinion, and I will go ahead and say what validates it for me. And until we are losing the 786 level and in range to come retest some of these previous lows around $28,000, I'm not going to go ahead and say that I think this is going to continue to the $20,000 or the $15,000 mark. I have no reason to say that because that's not how I feel. And if I'm wrong, sure, I'll take it that I'm wrong. But until I get that validation, I'm just simply not going to try to, you know, spread doomium on you guys and try to get all the clicks that I possibly can by saying that this is the bear market. I simply just don't believe it is so. So again, looking in terms of this thing in the Fibonacci's, it is still sitting above its key level of support. This is the macro retracement zone. So remember, what that means is that as the price works its way up and it starts to retrace, as long as it is above this level, it is within the realm to see growth back to the upside and a continuation back up to new highs. But the moment it loses this zone, it then becomes real likely that we're going to revisit these lows and probably go back down to set in lower lows, which in that case, likelihood does start some type of extended bear market for maybe 4, 5, 6, 8 months. Who knows? But more than likely something relatively extensive. Okay. So again, my honest opinion at this point right now is draw out your Fibonacci's and keep an eye on how we interact with these levels. Looking at some of our indicators, we have crossed bearish on our daily MACD, and we are in oversold territory on the RSI. The last time we were at this exact level was back in the summer or May of 2021, which is just around where the bottom of that big fall was. And so, based off of history, this very possibly could be the last kind of capitulation event in which we will have before seeing a continuation to the top side, especially now that we have dipped into the golden Fibonacci ratio zone. But it all solely depends on if we're capable of seeing that break of trend in which we get back above this level of resistance and then start to clear some of these previous levels of support and, of course, start to work our way back through those resistance levels. So overall, just a quick update. I know a lot of people are going to be screaming that this is the bear market. I don't think that this is the bear market yet. And I told you guys what validates it for me. A lot of our indicators are flipping bearish. So the possibility of us coming back down and losing this level are possible, but it is not guaranteed yet. And I'm not going to sit here and just let a whole bunch of people scream bear market, with realistically not evaluating it myself and giving my opinion there. So that is my sole basis of this whole entire thing. A lot of our on-chain analysis does still point to this being some type of bullish reversal at some point, looking at inflows and outflows, not really growing at all, looking at some of our whale exchange ratios still showing the whales accumulating, and even looking at the leverage ratio compared to the funding rate still pointing in the direction that we may be reaching a bottom of people shorting the market. I think overall there is still a lot of bullishness, fundamentally here, and considering the fact that we're in a much better place fundamentally and environmentally for Bitcoin and for blockchain's future, I still think that there's a lot of potential. So again, until we do start to see this complete validation of a downtrend down past 34,800, I'm really not too concerned, but I definitely am growing in concern as this thing does continue downward. So that's my overall opinion on this thing. Of course, I know that some people are going to have differing opinions, and I do offer up, full communication down in the comment section below. Let me know your thoughts. Where do you think this thing is going, and how are you expecting this to play out over the next 4 weeks? But with that being said, of course, I hope you guys did enjoy today's video. Try not to freak out about it too much. Staring at the charts all day isn't going to help anything, especially not whenever you have no control over it. So just sit back, relax, and let's just see how this thing plays out, and I'll see you all tomorrow. Peace.